Hey everybody, gold and silver have taken a pretty good beat down over the last couple of weeks. Gold's at 1327 and silver's at 2677. Last I looked just a minute ago. There's a good article here on Kitco. It talks about the physical demand versus the ETF demand, and the deal is the ETF demand is going down. There's outflows of silver going out of the ETFs, but interestingly enough, on the physical side, the retail demand, people in the street, you and I, buying physical silver, that demand's going up. And the numbers on the U.S. Mint are bearing that out. The sales on the U.S. Mint for 2010 were 34,662,500 ounces of silver, which is triple what it did in 2007. In 2007. In 2007, they had 9,887,000 ounces sold. So the numbers are bearing out a giant increase in physical demand. You already know that if you've gone to your local coin shop or whatever, the bullion, there's a shortage. It's hard to get bullion. If you've ordered bullion, there's several weeks wait time to get your bullion. So the physical demand is obvious. And the physical demand, the guy in the street, that is what's holding the price where it is right now. Stock market's doing okay, so there's a lot of outflow out of the ETFs and into stocks. But as soon as you have an event in the world, another country on the brink of war, a flare-up somewhere across the globe, some kind of bad economic news, which is just bound to happen, the price, or the traders are going to take all that money they put in stocks and they're going to panic and put it all back into precious metals, because that's where they feel their safety is going to be. And if you buy now when it's low, you can capitalize on that move up. So there's an article in Kitco that talks about, where's the departure of the physical market versus the ETF market. When will the physical be the one who really drives the price much higher? And I think that comes when people lose absolute confidence in the paper side of the equation, and they decide, I need to have that physical in my hand because the paper can't be trusted. When the masses wake up to that fact, the physical demand is going to be the only demand driving the price, because they're going to be dumping ETFs, and everyone's going to be rushing down to their coin store or wherever, or a dealer or Craigslist or eBay or wherever, and they're all going to be trying to buy this physical silver. So now's the time to get in when the prices are going down. If they go down farther, you just keep averaging yourself in. You'll come up with a good price. But these prices will go back up as soon as there's any kind of bad economic news. And the Federal Open Market Committee is meeting, starting a 2-day meeting, and by all the prognosticators, whoever you read, what business site you go on, they're all saying the same thing, that there's no sign of the quantitative easing subsiding. They're going to continue with the quantitative easing. So their mentality is the same. They're pulling the same rabbit out of the same hat and hoping it does something different. So there's no fundamental change there. It's bad for America, but if you're trying to protect yourself and even build your own wealth, buying when the prices are down is when to do it. So that's my opinion, and if you have a different one, you can leave a comment below.